Welcome to Part 11, the final lesson on when and how to buy a fixed index annuity. Fixed index annuities are a smart choice for federal employees looking for growth and security in retirement. The best time to consider a FIA is as you approach retirement, typically between your late 50s and early 70s. This is when you shift focus from accumulating wealth to preserving it and reducing risk. Working with a fiduciary advisor is key. They'll prioritize your interests over selling products. Review the contract details carefully, including participation rates and fees, to ensure they meet your needs. Always check the insurer's financial strength. Their guarantees are only as good as their stability. It's best to purchase annuities with tax-advantaged dollars to maximize your benefits. Most federal employees find the sweet spot for buying a FIA is between ages 55 and 70. This timing helps you avoid market corrections and allows for tax-deferred growth. In your late 50s or early 60s, consider a deferred FIA with guaranteed income riders for those gap years before Social Security kicks in. After retirement, use rollover funds to secure a lifelong income stream with options for inflation protection. Decide between immediate and deferred annuities based on your income needs. Some need cash now, while others can wait. Immediate FIAs start paying out right away, perfect for those without bridging funds. Deferred FIAs allow for growth before income starts, ideal for planning staged income as your needs evolve. Many retirees choose a mix of both to balance immediate income and future growth. You can buy annuities using your TSP, but options are limited there. Transferring to a private FIA gives you more control and customization options. Private FIAs allow you to choose participation rates and add features like inflation protection. They also offer better legacy planning and liquidity options than TSP annuities. Following IRS and TSP rollover protocols is crucial to keep your money tax-deferred. Be mindful of all fees and ensure you're not locked into unnecessary complexities. Compare features and seek strong insurer ratings to make informed choices. Align your FIA timing with Social Security eligibility and other income needs. Don't forget about inflation. Consider options that protect your income over time. In conclusion, FIAs can provide a safe and predictable retirement income for federal employees. With the right timing and advisor, you can create a resilient retirement plan tailored to your needs. For more information, reach out to Kris Keush.